YouTubers, and welcome back to the Independent Investor Part 3. And I was just talking about Skew, and maybe there's a little bit more risk that's in the market that's not below the surface and starting to show up. And I have, like I said, a spreadsheet with probably about 20 some different metrics I kind of monitor on which I update every 2 months or so, getting a feel for the market. Again, that if it's above 50, it's bullish. Below 50, it's bearish. Right now, it's slightly over 50, but from a valuation standpoint, it would be an outright sell. The only thing that's keeping that, I call it my bull-bear index, is just the technicals, and like we're seeing, the market's just continuing to go higher, stay above the moving averages, and there just seems to be quite a bit of momentum. So, but with that being said, I still feel caution is really what you want to be focusing on now. And and then if we do have a correction, I mean, because we've gone up so much, I mean, it's getting to a point now, the higher we go, the lower it's probably going to go, just because markets overshoot, and they never stop at what is perceived to be, what people perceive to be fair valuation, because there's different perceptions of that. But over long periods of time, there's kind of have been some standards on, you know, price to earnings ratios, averages, and that type of thing, but typically always overshoot those on the downside. So to me, the risk is more that to the downside than to the upside. So moving on for that, like I mentioned last week, and my focus really is income. And this week is, I'll talk a little about REITs. These have actually been really good. I've participated these for this whole bull market. As I said in one of my previous videos, I found some yielding, you know, 10-11%, especially in the retirement home industry, where their income really wasn't affected at all, and they were growing, and I was getting REITs at you know, paying 11% dividends. So I bought those. Unfortunately, a lot of them, there was kind of consolidation, and they got bought out at pretty good prices, but I forgo that dividend, of course. So right now, I'll highlight 3 REITs that I have. Had some of these for a while. One is new, and actually 2 are relatively new. The first one is Dream Global, and its symbol is DRG.UN on the Toronto Exchange. All 3 of these trade on the Toronto Exchange. It has a very good dividend yield right now of 7.12%, and which is quite stellar in this market. And I've had this one for quite some time. I think I've traded it a little bit, but it's done fairly well. I'm not buying any now because it has rallied pretty strongly. I did buy a little bit on this dip here, and I probably would sell out pretty quickly if I got back to my average price when I re-entered. But on a weekly, we can see it's getting back to its previous high. It's gone from 11 all the way down to 7 and up, but over the long period, if you would have held, it's above its price back in 2011, you would have been getting those dividends all the way through. So, and what I like, it gives my portfolio some diversification, in that the properties that they own basically are in Germany and Austria. So it gives me some exposure to Europe, and so that's nice. And it's all mixed office space with I think fairly big corporations, and their occupancy rate has been increasing. And there's been some, it's hard to know, but saying that Europe economy may be improving a little bit, and maybe that's why their occupancy rate now is above 90. It's 90.7%. So I think their dividend is pretty stable. Again, as I mentioned last week about beta, I want low beta positions right now, and the beta for this is 0.43, which you wouldn't think with that kind of move there, but that's what they had on TD. TD has, Waterhouse has a $12 target on it, which we're at 11.24, and that's really, I'm content if this just goes sideways and I pick up that 7% dividend. Another thing about REITs, it's nice, most of them pay their income out monthly instead of waiting for quarterly, so it's nice. Usually a lot of them seem to be in the middle of the month, around the 15th, which is kind of nice. They've also expanded, I think, now into the Netherlands, so again, but they're focused in Europe, so that's, I quite like this position. Next one is Innovalis, INO.UN, again on the Toronto. This is similar to the Dream, and I just came across this just digging around, and it's paying an 8%, 8.12, which sometimes I get skeptical when the yields get a bit too high, but I haven't done a lot of in-depth research on this, but it seems to be okay. Again, we're at the higher end of its price, so I'm not really purchasing any more right now. But again, it's predominantly in France and Germany, and its beta is just 0.07. You can see here it's been really pretty, just in a tight little trading range. And the last one I came across, the name came up, I was reading an article, and I liked its, like I say, when you buy something, you should always define why you're buying it. So right now, the first two, they give me diversification, and 2, they give me income, and 3, they are lower beta. So if we had a sudden market correction, the odds are these would fall less, and then I would have time to say, okay, I'm just going to liquidate these because I don't want to see the price go down too much more, but it might give you a week or a couple days, or depending how quick the market fell. So it does give you that time to respond. Again, all these, if they over a longer term, if they fall through my average price, like I mentioned in my previous videos, I get out right away, because I do not want the capital loss taken away from my income. These are defined as, again, so you always got to define what you're doing. These are income plays, so the capital gains and the upside is nice, but if they fall below my average price, I typically just liquidate, and then maybe re-enter at a later date. Of course, initially when you do your first position, that's difficult, and that's why I always do small amounts and then slowly build up the position if it looks like it's going to work. So getting back to the pure industrial, that is AAR.UN, again on the Toronto. And what I like, their dividend's only 4.6%, and beta's 0.75, so the beta's a little bit higher. And I did get into this on the high side, which I don't like doing, but after a small dip, it was up at 7. You can see my average price line there is about 6.50, and it has moved up, so I got a little bit of a buffer there. And I did add a little bit, still a relatively small position. I'd like to see this maybe go higher or get really flattened out, because we did have a big move from 5 to 7, and the dividend yield is a little bit lower, but it is growing, and their revenues since 2012 have doubled from 109 to 200. But what I like is there's kind of a different play. It's really on e-commerce, and we can think as more retail goes online, they're specializing, though they have other assets, but they're specializing more on warehouses and setting those warehouses up with like logistical support for online sales. So as we see more FedEx trucks and that driving around delivering Amazon parcels, I thought this was kind of an interesting, not a pure play, but that is their focus on distribution warehouses and e-commerce. So again, this is Canada and through United States, so some diversification that we have in the United States. And online sales, as we know, continue to increase in the United States. As we just saw, the traditional retail stocks just getting hammered this year, a lot down 60–70%. And and their biggest tenant is actually FedEx, and that's 21% of the revenues, and their weighted contract with the FedEx is over 8.8 years. So that's pretty good again. So that one I'll monitor, and it's kind of interesting. It's got a little bit of growth going in there. Continues to grow and focus on the warehouse and logistical kind of support. And I just thought that one was quite interesting. That's all I really have for this weekend update. Thank you for viewing. Again, I'm not a financial advisor. This is just a dialogue on what I've been doing. Anything I talk about here could go the other way. It's like I say, it comes down a lot to probability. And before you take any action, make sure you talk to your own financial advisor and do your own research. And if you enjoy these videos, please give me a thumbs up and subscribe to my channel. I appreciate that. And I'll probably try to put out another video midweek. And thank you for viewing. Bye for now.